Good afternoon. Welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always is Vivek Iyer. Hey Vivek, good afternoon. Markets cheered and they were in the festive mode as well. They still continue to be so, but they have come off from the highs. Almost a 200-point cut on the Nifty from the highs of the day. We are at the 25,680 mark. The highs today was around 25,780. So yes, some selling pressure from the highs. Midcaps in the red. Bank Nifty too, after touching that record high level, has seen some retreat from those levels.
That's right. Good afternoon, Sonal. And like you mentioned, we start off the day. In fact, the Bank Nifty hit a record high, cooled off a little bit, and the mid-cap index today sulking a little bit compared to the large cap peers. But we have a lot lined up on the show, some important corporate conversations as well. So let's start off with the top headlines. Stocks surged with the Nifty at a 52-week high after rising past 25,700 for the first time in 2025. The Bank 52 scales to its all-time high. FMCG and consumer durables lead the charge, even as IT, metals and PSU banks track. Mid-caps slipped.
Whirlpool of India in focus after it enters into multiple agreement with its parent company. Brokerage firm Kotak says this will ensure long-term business continuity after the parent's impending stake sale.
JSW Infra in focus after reporting their Q2 numbers. The company sees a 26% rise in revenue, while profit and margins come under pressure.
Mid-cap ID stocks in focus after reporting their Q2 numbers. LTIMindtree sees the constant currency revenue growth at 2.4% in the quarter gone by. Meanwhile, Science saw its DET services revenue surge 0.5% sequentially. Company expects higher H2 margin as compared to H1.
Shares of Zee Entertainment trade low after the company's EBITDA and profit fall short of analyst estimates. The company also reports a negative operating cash flow in the second quarter.
All right, those are the top headlines. As we pointed out, Nifty is off the morning highs. It's a 200-point cut from the highs of the day. Mid-caps also under pressure. And we have the Bank Nifty, which is higher. But yes, it's underperforming the benchmark as well as we speak. But let's go across to Sudarshan in our special segment, Mid-Cap Movers, which are the big movers in focus today. Sudarshan, over to you.
So let me start with those companies which are reacting to the news flow. And first in that list is Dalmia Bharat, which has come out with its Q2 earnings just a few minutes ago. And on most of the front, earnings were largely in line. And that's the reason you are seeing that Dalmia Bharat is currently up almost 2%. Yes Bank, it slipped in the trade, currently down almost 4%. The reason is just like an hour ago, there were certain comments from SMBC that it's not looking to increase the stake more than 25% after their stock has slipped. Zee Entertainment continues to be under pressure after reporting earnings. Both ad revenue as well as margin both were under pressure in Q2. Anupam Rasayan has also slipped after its results, currently down more than 6%. Kalpataru Limited had reported Q2 updates and those updates had looked very strong, and on the back of that you are seeing a big move. Stock currently up more than 8%. Some of the major mid-cap gainers, as you mentioned, Whirlpool has signed multiple agreements with its parent company, and that's the reason for second straight day the stock is seeing big buying, and today also it's up more than 11%. Force Motors continues to see a big buying on an expectation of an improved demand, and today also it's up 6%. Canada HDFC Life Insurance got listed today, and after that we have seen buying listed at rupees 106 and currently trading around 111. Muthoot Finance, all the gold financiers have been seeing buying because of the surge that we are seeing in international gold prices, and today also Muthoot Finance is currently up almost 3%. Some of the losers, Swiggy is under pressure after Eternal has come out with its earnings, and earnings had looked a bit mixed, and that's the reason you are seeing a big downtick coming for Swiggy. PV Fintech has been falling continuously, and the one reason is that all the insurance companies are negotiating commission cut. That's the reason, and that's the main business for PV Fintech, and that's the reason you are seeing that a big fall that coming for PV Fintech. IGL is under pressure in line with all the other city gas companies ahead of its quarterly earnings.
Thank you so much, Sudarshan, for joining us and taking us to all of the movers as far as the broader end of the markets are concerned. Well, we'll now slip into a short break. We'll get you excerpts of our conversation with the management of JSW Infrastructure next. Stay tuned. Welcome back to Midcap Radar. Well, what's actually transpired in the last 30 minutes or so has been an intensified selling pressure across the midcap and the small cap space. Have a look at some of the names, especially in the auto ancillary pack. Global auto major Volvo has gone ahead and lowered the guidance for the North America Class 8 truck market growth. They were earlier expecting a degrowth of minus 11%, and now they've gone ahead and said that they now expect a degrowth to the tune of minus 14% or a 14% degrowth. On the back of that, a slightly negative need-through coming across for Bharat Forge, even a Motherson Sumi, and even an RK Forging or a Ramkrishna Forging. All of these stocks near the day's lowest points. Along with that, the metal pack has cooled off quite significantly from the day's highest point. Names like Tata Steel, JSW Steel, even Jindal Steel for that matter, all of these stocks have cooled off quite significantly. Vedanta as well as Hindustan Zinc. Hindustan Zinc, remember, reports its results today. That particular stock too has fallen to the day's lowest point. Well, like we had highlighted earlier, JSW Infra reported their results yesterday, and they reported a 26% rise in its Q2 revenue, while profit and margin declined during the quarter. Earlier today, I spoke to Rinkesh Roy, the joint MD and CEO at JSW Infrastructure, on their Q2 cargo volumes, overall outlook, and more. Let's listen in.
The total cargo handled was 28.9 million tons, a growth of 3% year on year. And the issue on the mines was basically in the Odisha sector. A total last year in the entire first half, 16.6 million tons were handled at the different ports. This year there was a massive drop to 9 million or thereabouts, so a drop of around 7 million tons. These were on various factors, mostly relating to commodity prices of iron ore in the export market. So what we have seen currently in this month, there's been a slight firming up of prices upwards, and now we are seeing an increase in movement towards the ports. So we hope that we'll be able to cover this losses to a great extent. And the loss at the Paradip iron ore terminal was close to 3.4 million tons. And if this would not have occurred, our guidance of 10 million tons, 10% growth would have held good.
Understood that, sir. So now you've slightly trimmed the guidance lower. You still aspire at the upper end of your band to reach the 10% mark. Is that accurate, sir?
Yeah. We will be, now be realistically looking at somewhere between 7 to 10%, depending on how the iron ore market pans out. And if it's on the higher side, we are very confident that we'll make it up. If it's on the lower side, we'll be looking at that number of around 7%, because historically H2 gives you far better growth than H1.
Understood that, sir. So the other important point, and something that we always discuss when it comes to JSW Infra, is the share of the own group cargo versus the third-party cargo handle. So what was the third-party customer share in Q2? Q1, it was 52%, whereas that moved to at the end of Q2.
So the group share in this quarter was around 54%, whereas for the entire first half, it stood at 51%. So third party was 46% this quarter, and for the entire half, it was 49%.
Understood, sir. You've kept a top-line target in the range of 710 to 720 crores in FY26 for the logistics business. And that is one particular space where, especially when it comes to the kind of growth that they're expecting, it's expected to do far better than the cargo business, of course, or albeit of a lower base. So give us, are you number one on track to achieve that guidance? And number two, what kind of margins will that happen, especially given the fact that analysts fear that the Navkar Corporation assets may give slightly lower EBITDA margins?
You see, if you look at the picture in the first half of this year, already Navkar has clocked revenues of over 310 plus crores in this first half. Our EBITDA numbers have reached around 45 crores. If you compare it to what it was with the previous ownership, the entire year of Navkar operations yielded only 45 to 50 crores, which we have done in half of this year. We still stand by a guidance of 100 crore plus EBITDA for Navkar. And we have been adding on now, as you would have seen, we had announced siding at Kurtini, which we are planning to ramp up to a world-class multimodal logistics park. And there are other acquisitions, small acquisitions on the anvil. So all this put together, we stand by that guidance of 700 crores plus in revenue and the top line crossing 100 crores and the EBITDA crossing 100 crores. That is, we stand by that guidance.
Okay, so the absolute EBITDA figures, you're expecting it to be much better than what it was under the previous management. We understand that. Also, when we talk about JSW Infra, the one thing that the market always looks out for is the kind of inorganic growth that, especially that you've been able to capture. Quite a few acquisitions, Navkar being one of them, where operational efficiencies have improved significantly. Also, you've got a new berth at Kolkata as well. Briefly, if you could tell us about the inorganic growth that has come about in H1 and what are the kind of aspirations that you have for each of these assets?
So the container berths that we have taken in Shyama Prasad Mukherjee Port Trust. So this is going to help us, put our footprints on the container business, which we have been trying to expand. Our first foray was at Mangalore. And in this contract, we have interim operations allowed. So we're looking at how quickly we can start the interim operations there. And in the logistics sphere, we have taken over this Kurtini siding. So we expect it to be operational within a month or two, and gradual ramp-ups will be taking place. So these are, like a very complementary business, the container business as well as the logistics business. These are very complementary to each other. It's a core adjacency to our entire port infrastructure. So we hope that these inorganic acquisitions will push up the EBITDA numbers also in this year. Okay.
So the other question is, promoter stake continues to hover around the 75% mark. Any fresh QIP plans? You have very strong capex plans, especially for the logistics part of the business. Would you look at a fundraise going forward via the equity dilution route?
So there will be, mandated by SEBI after the 3-year period. So that's going to come in September 26, so where we'll have to dilute the stakes of the promoter. So that is going to happen. And what process we'll adopt is something we'll have to strategize on.
Understood, sir. And lastly, what has been the impact of GST cuts, especially as far as traffic growth is concerned, cargo volume growth is concerned? Has there been any disruption, especially in Q2? And going forward, do you see better operational efficiency kick in, especially from the GST cuts come by?
We have not seen any major negative effects of any GST issues coming up. However, we are very upbeat that this will help and spur the growth movement further, because the GST cuts across board are a process of, improving more of consumption and more of industrialization. So that will help the entire sector.
All right, that's the word coming in from JSW Infra, the stock on our radar. By the way, there's some more pullback on the markets. The Nifty is up 60 points right now. When we started the show, the mid-cap index was down around 0.6%. Now it's down almost a 500 point. So we'll keep tracking that for you. For now, we'll slip into a short break. When we come back, we'll get you more news and updates on the other side. Welcome back. You're still tuned into Mid-Cap Radar. Anupam Rasayan, that's the next management on the show, reported one of the best quarters this time. Vishal Thakkar, who is the Deputy CFO at the company, is joining us now to understand the outperformance that came by this time. Vishal, good afternoon. Thank you for joining in. Well, it's a massive surge that we are seeing. What is the reason for this? Is it because some of the agreements got executed this time? Is it contribution coming in from any particular segment? Is it just a one-off and not something that you will be repeating in the rest of the fiscal? Explain that to us.
First, thank you very much for getting us on your channel. Yes, this quarter has been a very strong quarter, and this half also has been very strong quarter, strong half. We have been historically saying this for last few quarters now that we should be seeing a strong uptick as we go forward. And I think the momentum has continued. across pharma, agrochem, polymer, all three has been doing well for us. If you look at our growth, as you said, the growth has been over 100% on a quarter-on-quarter basis, YOY basis on the quarter. Our even from a cash flow point of view and from the balance sheet point of view also, we have been strengthening our balance sheet strongly now. Our working capital has improved significantly. Our operating cash flow has been over 450 crores for the half. So overall, a good quarter. I would say the primary reasons will be two. There was a strong commercialization of our orders that we had received from our customer. And also there was a liquidation of an old inventory of around about 150 crores, which also supported this. But even if I take that off, we have a very strong demand that we are seeing across all the three segments, which has really contributed to this.
So Vishal, in that case, what is FY26 guidance, or what would the revenue growth look like in FY26? In the first half, you have done revenues around 12-17 crore rupees. Of course, it's higher than FY25 already. But will you be able to see double that number in FY26?
I would not really go and double it straight up, but will be fairly in a similar range. So we should be continuing the growth amount. I said that we should be over 50% growth for the year. And
what about margins? What band are you looking at?
So the margins, if you look at it, we will be historically, I've been guiding around about 24 to 26% margins. I think steady state margins, you should take it at that level. I would go with that number. But for this quarter, because of the one-off sales where we have strengthened the balance sheet and focused on that, so we have taken the old inventory out, which has a little lower margin than what we would have seen otherwise. And also the new products that we have launched from polymer and pharma, which will start kicking in, the stronger margins will start kicking in the next 2 quarters. So overall, steady state basis, we should be back to the 24 to 26% EBITDA margin that we have been guiding historically.
Right. Mr. Thakkar, we also want to understand, TANFAC, your subsidiary has done quite well this time around. We want to understand what is the outlook on the performance over there. And another question that analysts want to know is, are you planning to add any capacity as far as R32 is concerned at TANFAC?
So I would let the TANFAC management speak about the R32, but if I ask you if I suggest about their performance is in line with what we are expecting going forward. So they have a strong numbers. They will continue to deliver a strong growth because the markets are pretty steady in terms of demand or more buoyant, I would say, and they've been doing well. I think they should continue this journey.
Vishal, the other aspect of the business is fluorination. How much is that as a percentage of revenues currently? And margins tend to be higher in this business, right? So when does that start contributing? And if they do, will you be surpassing your guidance in terms of margins, or will it be there, the one that you mentioned?
So see, fluorination is practically reaching around about 18 to 20% of our number in terms of our revenue. And it should continue to grow, and we expect that full year should be over 25%. So that's where we are talking about the fluorination part of the business. Second, yes, their margins are stronger. As I was saying, that when we launch new products, it takes a little bit of a time before it gets the full potential of its margin. So if you look at the next year, yes, we should be looking at a stronger margins compared to this year's margins.
And in the segments generally, pharma revenues, they've been growing quarter on quarter. We saw around 75 crore rupees in the quarter gone by. What was it this quarter itself? And are these revenues part of LOI, or they are non-LOI based? Also, the products which companies are supplying, are they going into patented products or non-patented products?
So if you look at pharma largely it is an import substitution. We are focusing more on the KSM side rather than going into the API side, because that's the segment that we believe is where we have a stronger play. And there is a strong synergy from our other product portfolios also. So that value chain really plays up for us here. So pharma is more we are supplying to domestic players currently, and later on we'll think about the international markets as we go. And they are around about 25% of our 23% of our revenue this quarter.
take that point, Vishal. Thank you so much for joining us today and giving us all those insights, and wishing you and everyone at Anupam Rasayan a very happy Diwali. That's the word coming in from Anupam Rasayan. That's the word coming in from Anupam Rasayan. But with that, we'll wrap on this show with a quick note for our viewers. As you can see on the screen, there is a Money Control stock score just above the line graph. This is a score assigned to each stock based on Money Control's multi-factor algorithm. It is calculated by analyzing over 40 parameters, including both current and historical financial statements, price charts, and technical indicators for each stock. Each of the individual parameters considered for calculation of the 4 factors are assigned a score, which is then aggregated to arrive an overall Q factor score, G factor score, V factor score, and T factor score. Remember, this is not a buy or sell recommendation. Any investor or viewer is advised to carry out necessary diligence on their own or through a certified registered financial advisor for investment decisions.